Pinterest, Zoom coming to market, both stocks popping. Let's get the details with Romain Bostick.
Yeah, guys. So, I mean, look, everyone was sort of waiting for both of these IPOs, not just because they were looking really just to sort of get in the door of another hot commodity here, but really you had two stocks here that I think offered a little bit more than maybe what we got out of Lyft. I mean, keep in mind, the Lyft story was way different. You had a company that not only wasn't profitable, but was really going into a landscape of competition that's a lot different than Zoom, a lot different than the narrative that Pinterest is putting out there as well. And I think that's why you're seeing the reaction in this market today to both of these stocks, at least in the early going here. We'll see just how much this sustains itself. But right now, there was a lot of pent-up demand, I think, for good quality companies in this basket.
Cash raised at this IPO remained $1.4 billion. The value for Pinterest now, $10.1 billion. It sounds phenomenal.
Well, it sounds phenomenal, and Pinterest wants you to think that they're phenomenal. I mean, if you read through their S1, they're clearly trying to build a narrative, not only that they're not social media, but that they're really an e-commerce company. They're not trying to compete necessarily with Instagram per se. They're really trying to compete with e-commerce companies like Amazon. That's really how they're trying to pitch themselves. And a lot of investors that we spoke to leading up to this IPO, they actually talked about the potential for Pinterest not only to do well with regards to e-commerce, but even to be sort of a new advertising mechanism, sort of an alternative to Google and Facebook, which sort of right now sort of dominate the online ad space.
Romain, this whole process seems remarkably logical once you take a step back and take a look at it. Lyft, a company that people have got a lot of questions about, really haven't completely got their heads around the business model and certainly have concerns about the bottom line. That has a very tough time of things. Then you compare that to Zoom on the other end of the spectrum, B2B, easy to understand, making a bottom line that kind of makes sense, clearly got expansion sort of potential. One's up 76%, the other one's really struggling. This is the markets at work.
Yeah, and keep in mind, Zoom is coming essentially into an industry, or it's already in an industry that has already sort of been in favor with Wall Street and with a lot of investors. This idea that you position your company more to the business side rather than the consumer side, that's been the hot trade for a while now. You're seeing that in these software as services companies and the cloud computing companies. Zoom sort of fits somewhat on the periphery of that with regards to the video services that it offers. And that was a lot of the reason why you saw this valuation get bid up in terms of the actual IPO price itself, and I think that's why you're seeing this sort of bid up now in the secondary market as well.
So what signals will other companies that might be looking to go public this year be taking from today's market action? Pinterest right now up 24.5%.
Well, the real story here is that you have to have a good narrative. And Guy kind of hit on this idea that Lyft's narrative was kind of muddy. A lot of people didn't understand how we knew what they did, but we really didn't understand how they were going to deal with the competition, how they were going to grow. When you read through Uber's S1, they had a much stronger narrative. It was much clearer. Now, whether you bought into it or not, that's a whole nother topic. But there was a very clear narrative. You saw that with Zoom in their S1, and you saw it with Pinterest. Again, whether investors buy into it or not, that's a question. But you have to be able to put out there very clearly what your vision is for the company and how you're going to navigate through the industry.
Romain, does this also disabuse us of the idea of kind of it's bad to clump? We've got a massive clump of IPOs, and I never quite understand why this happens, but it seems to at every kind of turn when we see these IPOs coming through. Does it seem as if investors are capable of differentiating? Many of the investors that are going to be putting money in here are the same investors. They've got their heads around this. So I'm kind of wondering what the clumping signal tells us.
Well, there's two sides to this. One, the clumping is occurring because a lot of companies, I think, see the window of opportunity closing for IPOs, and they're trying to sort of get in the door before potentially we get into a downturn of the economy, if that happens. But on the upside of that, the issue with the clumping that's working in investors' favors is investors were really looking for something new, Guy. Think about the run-up we had in 2016, 2017, and even part of 2018. It was a very small basket of stocks, mainly these large cap tech stocks that sort of we've rode this wave higher. But once that sputtered out, people were really searching for where to put their money, and there was a lot of confusion as to where to do it. I think the cloud computing stocks got the benefit of that. People sort of clustered into there. But we know, Guy, that this is, Wall Street tends to be kind of a herd mentality here, and they sort of want to be where they think other people are going to be. And with this clumping right now, it at least gives them sort of another sort of pasture to sort of roll into where they can feel comfortable that they're going to make money.
Does the Lyft experience mean that we have to be very careful on Monday to see whether Pinterest drops like a rock?
Absolutely, and keep in mind, Lyft was sort of a victim of sort of the clumping effect with Uber because it gave investors sort of a more direct comparison between the two companies. You don't necessarily have that with Zoom as far as companies waiting in the wings to go public, or with Pinterest. But some of the other companies that are going to come down the pipe, potentially like an Airbnb, potentially like a WeWork, these are companies that have significant issues that investors know about. There are going to be a lot of more direct comparisons that could work against their favor. But keep in mind, we've had some very successful IPOs. A lot of people focus on Lyft, but just over the past few weeks, I mean, not only are you getting these two companies out of the door today, but you have Jamia and you have a couple other companies like Futu Holdings and some others that have actually done very well because they were sort of standalone in their story, standalone in their narrative, and they offered investors sort of a picture of profitability.
Yeah.
Yeah.
Romain, we're really struggling with 2,900. We're really struggling with 2,900. Yeah. The healthcare sector is acting as a pretty decent break right now.
Yeah.
Can I look at these IPOs and go, you know what, that gives me reason to believe that we go higher from here, or do I have to sort of disassociate that from the wider market?
You have to disassociate it for a couple big reasons. A lot of these stocks obviously aren't in any indexes, any major indexes, so they don't really have the potential on their own to sort of move the needle on that front. But the other issue with that 2,900, and we were talking a lot about this yesterday, is this idea here that investors have pretty much priced in almost every sort of catalyst that we were looking for, whether it's trade, whether it's the Fed, whether it's the earnings. So you kind of need a new catalyst to sort of get us over that hump. And some of that might come in the sort of improving picture on the economy. We saw that with retail sales, and you definitely saw a little bit more enthusiastic chatter that maybe some of the worst case fears with regards to the economic condition, that wasn't going to be materialized. But it's going to take a few more months, maybe even a couple of more quarters of that type of data to really get people back in a much more bullish mindset.